Hello, smart investors! How much attention could I grab if I started to recommend single stocks? Or scream about future stock market crash? Or big staple stocks growth due to huge inflation? Or casino gambling of only a one stock portfolio? Hit or miss, thick or thin? I could get 20% more subscribers, which according to my calculations will be 3.5 people by the time this video comes out. But I'm with my friend Boris, and we don't want to mislead you. Monday mover strategy, Bitcoin robots and artificial intelligence who bring 100% in a year don't hide their secrets. They are ready to share that crazy profitable knowledge for a few $100s. I love these noble, generous people who lead humanity and investors to prosperity. It's funny, but it's true. In order for a person to enjoy the result of investments, he must make them right. And to do them right, he must first learn by making some mistakes. It works in many branches of knowledge or practice. To get motivated to play chess, the child must win several games, and to win several games he must first practice. It looks like a vicious circle. Many people treat investments like gambling, often without knowing it. They rely on luck, choose single stocks, and consider themselves investors. Probably some people in the casino also call themselves investors. Why not? They are trying to determine a good time to enter the market, the time to stick money out of it, and this happens even when some investors use fundamental or technical analysis, thinking that they are studying the investments and businesses of companies, corporations. Of course, I'm not talking about Wall Street monsters like Ray Dalio or Warren Canteen. I'm talking about ordinary gingerbread investors. If you look at the odds of the bookmakers' bets for two outcomes, that is where, for example, there is only victory and defeat, and there are no draws. Subtract 1 from both odds, the size of the bet, and multiply with each other. It turns out that if you bet on both outcomes, you will always be in the red, you will lose money, and the bookmaker will always be in the black. Take money, even if you're perfectly versed in some kind of tennis and feel all the players and who plays on what surface is good or bad, this will not help you. Why? Thanks to your professionalism, you will guess the winner quite often, maybe even in 90% of cases, so what? But still, this will not give you opportunity to make money on bets. It's just that the bookmaker knows as much as you do, analyzes events even better, and so on. But the point is also that people are constantly voting for the favorite, for example, and the coefficient drops lower and lower. The bookmaker always selects the odds so that you stay in the black, regardless of the outcome of the match. He will always take his money. And the coefficient for the favorite already depends on the largest and professional players. And it is also useless to bet on an outsider, despite the high odds, because the chances of winning are scanty. The same is with the outcome for a draw, less. Honestly, they treat you there as gingerbread. Whoever you bet on, the odds are always against you, and the mathematical expectation of winning is negative. It is interesting to watch the game of your favorite team, but when you get poor together with it, the meaning of your plans is lost. In order to make money there, you don't just have to know the winner or be cool at calculating the odds. You have to know the almost impossible. Namely, where and for how much the collective mind was mistaken in its forecast. How will you know it? I don't know. Maybe you are really mistaken. How can we transfer all this to the stock market? As easy as pie. Where will the market go? Probably the economy will go up, which means the shares will follow them, right? We can make predictions about many things that affect the stock market or the price of individual companies. What inflation will be, in what year will the rate be raised or lowered, how much more Amazon will have to grow, and so on. All of this does not make much sense until you have your unique predictions that are not known to others. If you are right, then you bet on the favorite, and this is still not enough to make money. The rest have already bet there too. Therefore, you must know which way the whole collective market went wrong, although there is no doubt that he was wrong. At one time, I thought that the shares of Visa, MasterCard and Google should be in any portfolio. To be honest, I still think so. Well, they say, where are they going? Fortunately, now I just know that this is the wrong approach and way of thinking, and I would not recommend anyone to buy these seemingly unsinkable monsters. It doesn't matter, you can enter your company names here. Facebook, Alibaba, Apple, Kodak with General Electric or Boeing. Damn, everyone already knows that these are the coolest companies, so they cost like dinner with Warren Buffett. All the same salad and fish, but for $1 million instead of 13 bucks. And with such inflation, if you suddenly watch this video in 2022, then well, 300 bucks for the correct ratio. Relying only on the favorites in the same float strategy because of their price. After all, as you know, there is always a price for which it is worth buying a company, and there is always a price for which it is worth selling this company. The same company. There are no good or bad companies in an efficient market, because the price is always close to fair price. I mean in terms of stock prices, of course. This is why dart-throwing monkeys often do better than analysts in stock portfolios. However, if the monkey chooses a cool portfolio, then this is a sensation, and if the manager has outperformed the index by 0.1%, then we take it normally. He works for this. For sure. But I only bet on Manchester United. Seriously, dude, is this really a great team? Does anyone else in the universe know about this? How did you share such a secret with me? Why? Thank you. Of course, I am comparing the stock market to betting or casinos for illustration purposes only. The point is that, unlike bets or casinos, the stock markets have positive mathematical expectations. About 5% even after deducting inflation. Yeah, the index is at some point today like 4,300 or 13,000 for Nasdaq, so what? What expectation did market participants set? Under what conditions? What changes are already included in prices and which not? At every moment of time there is some kind of uncertainty and intrigue. Then elections, then coronavirus, then bankruptcies, then inflations. It's clear that you can have your own opinions and forecasts. But how do you know that the market has opposite opinions, for example? Who exactly? From commentators to articles, or from major players who are really shaping the market? I just want to ask you to think one step ahead, like in chess. The point is not even that there will be a head. You see it well and have a presentiment, as for example, many felt the election of Biden instead of Trump, or high inflation and so on. It is not enough to be right. You need to understand what is already inserted in prices from other market participants, whether they are mistaken. and on what, damn it, side at all. Musk has already released panties to you, to all those who shorted the overpriced Tesla company. For sure it was overpriced, maybe. Maybe the shorts were right in their assessment. I think they are right. So what? How did it help them if the market was thinking differently? This helped them lose money, and Tesla's shares just soared even higher. Higher and higher, down to the wire. What remains for the market picker? He must be as taught as a knight and as smart as 20 Nobel laureates at once. Because in the fight against the market and the crowd, he will also have to fight off broker commissions, tax costs, analytical costs and time costs. Will you try to play this game, friends? I definitely will not play chess with the Grandmaster for money, only for flicks. I hope you will not gamble after this video, except for fun and without losing money, please. Take care of yourself. And I really appreciate your investment in your financial education. Do me a favor, please like this video. It will help me in the further work on useful content. Thanks a lot for watching and hope I see you in the next videos. Thank you.